Good day to everyone. This is Dr. Sivaraman of iknowindices.com. Yeah, fine. Good morning to one and all. It is Asian session live market analysis on March 1st, 2010 between 5 and 5:30 GMT. And we will be doing the simple market tracking technique using the live market code page. And probably I want to reflect on the yearly forecast, what I had given, and bring out certain points from there, and that might be of some use to you. Okay. Let me give the link for the live market code page. You can use it to see the live market code currently where exactly the market is. I'll fix the camera over that of the live market code page and explain to you what had happened during this particular session. Now currently euro is at 1.360305 area. The low is 1.3591 and the high is 1.3664 and the net change is 25 pips negative. And in the case of GBP, you find that it is trading below that of 1.52, the psychological level, and the net change is 73 pips negative, and it has formed a new low, 51.32. And in the case of yen, it was trading around below that of 89, and currently it's trading around 89.06, 89.09. The net change is 15 pips positive. So as far as these three pairs are concerned, you come across that USD gaining moves are seen. Then with regard to CHF, you find the low is 1.0711 and currently it is trading around 1.0750 and 0760 is the high. The net change is 19 pips positive. So it is also showing USD gaining move. Then in the case of Canadian dollar, you find 1.0520, 1.0524 are the current level and 1.0509 is the low and it's showing a net change of 5 pips positive. So this is showing the USD gaining move. As far as Australian dollar is concerned, 0.8972 to 0.8975 are the current level, 0.8957 is the low, 0.9006 is the high. The net change is 20 pips net positive. So you find Australian dollar is showing USD weakening move. And when you compare the Canadian dollar and Australian dollar, both are showing the net change positive, indicating that they are trying to do the contrarian moves with regard to the currency pairs to start with for the new month and the new week. So we will just compare it with the cross, because whenever you come across a contrarian move, we need to analyze what happened to the cross. In the case of Euro GBP, 0.8970 is the current level, 0.8948 is the low, 0.8999 is the high, net change is 25 pips positive, and so this is because Euro is showing a net change of 25 pips negative, whereas GBP is showing a net change of 73 pips negative. So as a result, when GBP is more weaker than Euro GBP has gone up. So Euro GBP is trying to reach the psychological level of 0.90, and subsequently you will find that during the European session they may make a brief upward stop and above that of the high, and then subsequently start making the correction. So they have been doing the swing between 0.86 to 0.88 in the case of Euro GBP. Now they have taken it to 0.90. So that shows clearly that a lot of traders have taken the sell positions there. So as a result, you find that the GBP has been corrected so much. And in the case of Euro CHF, you find the net change is 5 pips negative and 1.4624, 1.4627 are the current levels, 1.4624 is the low. So market is Euro CHF is closer to that as a low, and the high is 1.4636, and hardly about 12 pips difference is seen between the high and the low, and probably they may make a downward stop in the case of CHF, because you can see that net change in the case of Euro is 26 pips negative, whereas in the case of USD CHF it is only 18 pips positive. So instead of making about 28 to 30 pips positive in the case of USD CHF, they are showing only 18 pips positive. So as a result, you find Euro CHF is making a small gain. Then with regard to the yen crosses, a lot of people are more worried about the yen cross because they made very extensive drop in the case of Euro yen and GBP yen. Currently, it has come to about 121.08 is the low in the case of Euro yen, and 134.58 is the low in the case of GBP yen. So they are all new lows shown there. The net change you come across is 2 pips negative in the case of Euro yen, and 48 pips negative in the case of GBP yen. And because Euro and GBP has shown good correction, whereas USD yen is not making a rise, very similar to that of USD CHF. So corresponding rise is not seen in the case of USD yen. So as a result, a nominal drop is seen, and so this is a new month. How exactly they are going to handle these yen crosses? So the yen crosses are expected to hold around these levels for a day, and subsequently you will find they are expected to make the unexpected firming up moves to start with, and subsequently the rise in this particular month. I will justify my expectations based on the yearly forecast, what I had given it earlier. So let me focus the camera over that of the slide. Now, what is the expected market moves for today? During the Japanese session, swing and firm up moves are expected. So around 7:30 GMT, you will come across Euro and GBP are expected to firm up and come closer to the high or breach the high. Then during the European session, further firming up moves will be seen, and subsequently towards late European session, they are expected to make the slide. Then after the slide, US session, they are expected to swing near the low or in the middle level, and then subsequently make the rise. So new month beginning, you will come across the volatile move, a part of continuation of the trend reversal move. Probably that continuation may not last long throughout this particular week, and you will come across suddenly Euro and GBP gaining the levels. You come across, this is an important week, the first week. You find the announcement of the interest rate decisions from ECB and also DOE, and you come across the non-farm payrolls this particular week. So you will find the market will be in full action, and after that traders will try to commit the position, and they are just keeping on the sideline and see where exactly the market is going and try to analyze how exactly they can enter into the market. So because of the uncertainty, a lot of traders are avoid taking positions, and those who are holding the positions, they are just holding the positions either with a hedging or without a hedging, and in that case they become more panicked. Then with regard to the initial high and low which are set during this particular day, I have just continued these levels with regard to the last week levels to show how exactly they have made the moves in the market to create the sentiment. So the last one is of the 1st of March this week. These are all the first 4 days of the earlier week. So Euro was around 1.3602 on last Monday. Even before that, it was around the same level. Euro was trading around the same level. Every week it was making a low around 1.34 area, and subsequently gone above that 1.36 and then stay around 1.36. So today also you find 1.3591 is the low and 1.3664 is the high, and they are much higher than that of the last Thursday. And Friday, you know that they came closer to that, and subsequently they went up to that level of 1.36 and went to that level of almost to that level of 1.31, 3637 and 3680 and subsequently made the drop to 1.36 area. So you come across there, quickly make the pullbacks move and probably that may give the sell opportunities for many. And let us see how exactly they are taking the market from here and review it and try to be defensive in our trading rather than simply go along with the herd of traders. In the case of GBP, you find last week it was around 1.54 area. We thought that that could be the low, and subsequently they showed 1.52, and on Friday they showed 1.5154 and then rise to 1.5254, and today they have shown this new low of 1.5132, and currently it is trading around 1.5163, and the low is much lower than that of last week levels. And in the case of CHR, so last week it was opening around 1.0739 and this week also 1.0711 and high is 1.0760. Last week high was 1.0770. So you find in the same range they are holding it and only making an upward move in the case of USD CHR and subsequently coming back to that of 1.07. That is what I was referring to last week, that they will hover around that 1.07 until such time Canadian dollar catch up to that of 1.07 area. Then in the case of Japanese yen, last week it was trading around the 92 area and now the low is formed 88.75, but it is trading around 89.05. The high is 89.18 and which is lower than that of last Friday level, and subsequently it is expected to gain the level. You find that 13 pips positive net change is shown and they have already done the brief downward stop and here you come across the rise. So a contrarian rise of Euro and GBP rise and also USD rise or the expected moves. And in the case of Australian dollar, you find that is the only country people are expecting the interest rate could go up. The rest of the countries, if you see in the report pages of many of the websites, you find that ECB is not expected to rise the rate and BOE is not expected to rise the rate and even US is not expected to, Fed is not expected to rise the rate. Only Australia, there from 3.75 to 4 is the expected rise in the case of interest rate. So as such it is holding high 0.8957 is the low. So it is also holding around 0.89 area and then the high is 0.90. This sort of move is seen and this move up and down moves are seen in the case of Australian dollar. And you will be wondering why Australian dollar is not correcting in tandem with that of GBP, because many of the occasions Australian dollar is supposed to make moves in tandem with that of either gold or with that of GBP in order to create the market sentiment, whereas which is not correcting it because they know pretty well that traders are not willing to sell Australian dollar as such in this, and we will come to know about it later. I'll explain it. Then in the case of USD CAD, 1.0509 is the low, 1.0551 is the high, and there is a expected gain of another 200 pips in that. Till such time, CHF is expected to swing around in this particular area in this week, and you will find USD CAD catching up the levels very fast, and from 1.03 it has come to that level of 1.05 and it is expected to catch up to 1.07 and then to 1.09. Then you will find USD CHF is also making the rise and also USD CAD expected to make the rise. So you will come across a contrarian move of the numerator currencies gaining the levels against that of the European currencies. Euro and GBP are expected to gain the levels. Numerator currencies are expected to gain the levels. Besides, the denominator currencies are also expected to gain the levels alternatively with regard to that of the numerator currencies. So here I like to point out why this sort of move has happened in the month of February, and there was an expectation of a reversal and the rise in the case of Euro and GBP from the uh, mid of January and also from February, whereas you find that most of the time Euro and GBP were correcting. So let me focus the PowerPoint presentation on the camera over that of the yearly forecast slide, what I had given it earlier. So this is the slide what I have used to present the yearly forecast for 2010 on 15th of January, which is also recorded. You can see it in the FX Rate recorded webinar place. So I have given a remark there that surprise world event in March, April or in November, December times to put US dollar under pressure. Yeah, unique event is expected in this particular uh, year. And now if you see that in the month of January, February, you have found that US dollar is gaining in a very significant way, whether the data is negative to that of US dollar or the data is positive to that of the US dollar continue to gain. And also whether the data is positive to that of Euro or GBP or the data is negative for Euro or GBP, Euro and GBP are making the correction. That sort of move is seen in the month of January and February, and there could be a trend reversal point. And this particular trend reversal point, I was expecting either in the month of March, April, a sudden trigger could happen. And in my earlier estimate, I was expecting mostly that is to happen during the month of November, December. I will just show the Euro chart, what I have shown it earlier. Okay, this is the chart I showed with regard to the Euro. So there, in the month of February, January, February, they are supposed to gain the levels, and then subsequently, March, it is expected to make a dip, or from the second and third week of February, it is supposed to drop, and then subsequently make the rise. Whereas this rise has not happened, instead it has continuously fallen lower and lower and come to that level of 1.36. But if you refer to that chart, you find that there is another drop which is expected in November, December, which has come here. So what I anticipated to happen during the last quarter of this particular year, which has happened in the first quarter. So probably I have to redraw the chart, and once this particular point is taken into consideration here, you will find that September, October, this sort of drop will not happen. And the trigger which is expected in the month of March, April, I think it should happen now. So that particular trigger can be of any nature, and I am not telling that what could be the nature of the trigger, and suddenly you might come across a trigger which is affecting the total US dollar sentiment, and then you may come across more and more adverse expectations happening in that market. And so that is how the markets are being placed currently. Let us see how exactly which comes into action. So I'll just minimize the PowerPoint presentation and focus the camera over the Lima code page and take up the questions which are asked here. I know there are a lot of questions pertaining to that of the current situations in the market. I am willing to answer the question genuinely, but I do not want to make any sarcastic comments and things like that. Okay. SC25, GBP USD and USD yen. Initial highs are below last week initial lows. Still more downside and or contrarian moves. Okay. Now, as far as GBP is concerned, you know that which is predominantly used to create the market sentiment, and suddenly you may come across that it is making the reversal point. And this is not new to us, those who are in the market for several years. And you know that when euro was around 1.5354 level, GBP went to 2.11 level, and surprising the entire market. And that many thought that it could remain in 2 point area for several months, but hardly they just stayed above that for 18 days, and subsequently they dropped GBP like anything. So in order to create the market sentiment, GBP is being used because it is less traded currency when compared to that of euro. That means lesser volume is seen when compared to that of euro. So the players, by investing less money, they will be able to easily create market sentiment. So for that, they use GBP actively in the market. So this sort of moves are bound to happen in GBP, and GBP is known to make such moves, and by that we should not just become panic or perturbed. And I'm expecting GBP is to catch up very nicely along with it, more than euro in this particular month. Probably when a trigger comes, then you will find that will be the first currency to flare up. You know the net permissible level for each day. GBP has got a higher net permissible level when compared to that of euro. Then in the case of USD and they have been holding it here around the 89 area for a long time in this particular year, and it is also expected to gain the levels. Probably they had accumulated a lot of long positions at the lower level. I'm expecting a contrarian move of a rise in the case of USD along with that of euro and GBP. Then after the event, probably many might come and say that, okay, yeah, what we expected has come true. But if I give a forecast that it is going to happen, it might become very difficult to accept. In such a prevailing condition, how can euro and GBP can go up? That is what anybody will ask. But a forecaster is a person who is supposed to foretell whether it is bad for or whether it is good for that particular currency, and it has to be given it. And it may come or may not come. That is a different question. But I wanted to say, as per my algorithm, this is what is being envisaged. And I also recollected the focus for the year slide and displayed here that in the month of March, April, an unexpected event could happen, and that can trigger euro and GBP to flare up. And USDN is also expected to participate at that level, at that time. Then Alex, you say that the players who are there, how big are they? I thought it was supply, demand and mood market. No, see, we need to understand that market is being facilitated by that of the banks. So unless and otherwise they give either way quotes, the buy as well as the sell quotes, market cannot make swings. So if the banks or for example sellers, if they keep sell orders in the market, and there will be no one trying to buy there, and whatever the spread you come across as 2 pips, 3 pips and things like that cannot happen. And anybody who wanted to buy will try to keep 100 pips below that market, a buy order, and no trade can happen. So in order to induce the market to be floating and also have the momentum, the banks are facilitated or the banks are asked to give either way quotes in the market. So they have to keep the buy order as well as they have to keep the sell order. As a result, you will find the bid and the ask will be there. If somebody wants to sell, they can sell it to the bank. If somebody wants to buy, they can buy it to the bank. That is how the market is being structured. So, besides the banks are actually the facilitators. Besides that, you come across the big players have got a greatest influence with regard to the market and with regard to the money power and with regard to the politicians and with regard to the bureaucrats. So, as a result, you find that they get the just decisive information from that of the market by various sources, and they know that when all the traders are not willing to take sell positions in euro and GBP, and they are only trying to buy, then obviously they can push the currency down and hit the stops because they get indirectly the information where the stops are there. And imagine that, okay, if the players are not big enough and if they are willing to sell GBP at 1.51, and suddenly BOA comes in for an intervention and buy. What will happen to their billions of dollars? You have to understand, and they will be thrown to street. So they will not take such risk unless and otherwise they have got a total understanding with all the other people. So that is how they make the moves in the market, and we need to understand that, and we should not think that the players are yet another trader. Then if you think that way, then probably we may not be able to understand how the market is structured and how the market is being manipulated. It is not a conspiracy theory. This is the actual happening in the world, in all the markets for that matter. And if you ask anybody who is very close to the market or those who are involved in direct activity of the market, they will be able to explain to you rather than me explaining it. So as far as the supply and demand is concerned, yes, obviously the market is supposed to work based on the supply and demand. And see at GBP 1.5159, somebody is supplying. Okay, what is the necessity for him to supply it? It is a fresh week, and predominant of the traders would have just liquidated their long positions, or they would have got the margin call and they would have stopped out. And why GBP has to further drop another 70, 73 pips now? Okay, if you think it is a genuine supply, then it should continue to drop, whereas it is making swings near that of the low. So what is happening here, which nobody is taking into consideration, namely the artificial supply and artificial demand. And you know that in any of the commodity market, like pulses or any other thing, essential commodities, whenever they want to rise the price, they go in for a stocking of that particular commodity. As such, when they stocked the commodity and created artificial demand, then obviously the rates go up. Then afterwards they try to supply it. And so this is a normal condition we come across in every market. And in the case of the trading market, how exactly the artificial demand or the artificial supply can be created? They do the circular trades and drop the currencies. Thereby, you find the supply increases. But actually, after seeing those levels, only the traders just become panic and just liquidate their long position, and they are expected to take the sell position, but they hesitate to take the sell position at the lowest level. This is the reality. That is why you find that when the market is dropping, and we can easily think that, oh, I could have sold a GBP at 1.5160 and bought it around 1.5080. After seeing 1.5080, we can say that I would have taken a sell position at 1.5160. But given the scenario, will you be interested in taking a sell position? So common sense will say that, okay, it is at the lowest level. It may not be a wise trade of selling at the lowest level. Probably based on the technical, some might take the sell position, but it shows very clearly predominant of the traders hesitate taking sell position. That is why the players are able to easily drop the market. And if somebody has taken a sell position, they would have easily booked the profit. And it's not happening. They are dropping and only hitting the stops. And still, people are not willing to take sell and buy trade. Even though many of the analysts say that Euro and GBP will drop further, traders hesitate taking sell and buy trade, which is very obvious the way in which it is making a downward move very freely. And why this happens, the players want the traders to do sell and buy trade, thereby they can be trapped. And at the highest level, they wanted, when Euro was around 1.49 or 1.50, they wanted the traders to do the buy and sell trade. And easily traders took the buy and sell trade. It's very easy to induce the traders to buy it at the higher levels after the rise. When the market looks bullish, they don't mind doing a buy and sell trade. But inducing the traders to do sell and buy trade at the lowest level is a very difficult task when compared to that of inducing the traders to buy and sell trade at a higher level. And you also reflect on that. You will be able to understand, okay, as far as I am concerned, then I find it comfortable to do buy and sell trade even the price is higher. That will be the normal human perception. Then balance. When will you take your first position for the week? Yeah, I will watch at least for two sessions in the week. I will not jump into the positions for the new week. I will watch for two sessions and see what sort of volatility they do and whether they are not cutting the low for two sessions. Then I will try to take the buy position. And if they are near the high, then I may do an intraday swing trade, but I will not convert it into a position trade. Then Jimbo. Why GBP is dropping so much as compared to euro? That is what I explained, that GBP is the currency which is used to create the market sentiment so easily. And that is why the players are making quick drops in the case of GBP. And that is why small traders, I advise them to focus only on euro and do the trades there. They will not easily lose their usable margin, even if they try to trade without the stop. But in the case of GBP, if you try to trade without stop and you know the spread on a given day or the net permissible level given for a day is about 250 pips and they are not still used it. And excepting 1 or 2 days, most of the days they are only doing the drop of net change of about 100 to 150 pips. For that we are becoming panicky. If they start doing 250 pips for 2 days, then nobody will withstand the market pressure. That is why they are very, very careful and they are trying to do this sort of swings here. And even the lesser amount of traders who are available in the market might run away. But during 2009, they used that sort of thing because they know a lot of traders are holding higher level, 1.58, 1.60 and things like that, the buy position. And only if they drop very quickly, then such traders will be able to liquidate because of the margin pressure. And subsequently, they have gone up to that level of 1.70 in the case of GBP and they have gone up to 1.52 in the case of Euro. So, but they dropped it drastically to 1.23 in the case of Euro and 1.35 in the case of GBP. And that was actually of a multi-year nature. Now they are not doing that sort of moves and they are only making small drops in the rise of their swing. On a daily basis, making about 100 to 200 pip swing is a daily effort. And it is not something extraordinary in the market. So, Arun, if they cut the low in GBP and go below them, do you expect some more drop? Yeah, I will see whenever they go below that of the low, I watch the live market support page. Say, for example, in the case of GBP, 1.5132 is the low. And if they, first of all, currently it is trading around 1.5159. If they come closer to the low and if they fail to cut the low 1.5132 and come back within 30 minutes to the current level, then I understand they made a false move. They are dip-like situation and subsequently they want to rise. The second possibility is they come up to that of the low 1.5132 and go below and form a new low 1.5115 or 15 pips or 20 pips below. Then subsequently come above that of 1.5132 in less than 30 minutes. I know that they have done the stop and if they stay above 1.5132 for another 30 minutes, then I will try to take a buy there. And in case if they drop below 1.5132 and go form new low 1.5121, then still they come up to that of 1.5130 and not going above that for more than 30 minutes. I know that they wanted to drop for another 2 hours. So I will not take a buy position and it is technically we can do a sell and buy trade there. Sell below that of the low when the market stays below the initial low for more than 30 minutes. Then probably you can aim for about 30 to 50 pips swing trade profit, but I will not venture into such trades because quickly they could reverse and I will, if I use the hedging, I will straight away hedge at that low level and keep stop at entry, watch the market and when the hedging is closed at entry, then I'll keep another hedging order and trail it up. So this is how I use the hedging to limit the risk. So showing the levels, it is not necessarily that the players need to strictly obey the technicals and fundamentals, and they go by that of the stops which are prevalent below the psychological level. So 1.50, 1.5150 is a psychological level, 1.5125 is a psychological level, 1.5100 is another psychological level. So every 25 steps, we come across a psychological level. Below that, the traders could hit the stops. And the players find that if there are cluster of stops, only then they try to handle it. And if there are only sporadic stops, and they don't venture out dropping it, because that may trigger many other people to take buy positions there. Those who have taken the sell positions, they will try to maximize the profit there. They will not just like that allow it. And that is why you come across always, whenever there is a drop of this nature, sudden pullback happening it. So it is not that only those who are doing buy and sell trade are losing in the market. Even those who are doing sell and buy trade can also lose money in the market. So we have to keep it in mind, unless and otherwise we structure our trade, or unless and otherwise we plan well. Okay, how much of risk I am willing to take, how much of profit I am willing to take. We don't plan beforehand and enter into the market, then it might cause some uncertainties to us. Then DP. What will happen to USD yen and the USD CAD when the USD bearish reversal happens? See, when the USD bearish reversal happens, I explained that they are expected to make the contrarian move, and you know that amount of money which is being deployed into the market by the players come down. That is why you come across the moves are very, very subdued most of the time, and also they are not making very frequent spikes, which indicates that they are not putting all the money into the market now, and they are using limited resources, and with the help of that they wanted to still earn money from the market. And as a result, you will find that in some currencies they will be making the USD gaining moves, some other currencies they will be making USD loosening moves. As such, they will bring in the balance. Then hypothetically speaking, SU25, if the rise does not happen in March, April, okay. Would that apply? Q4 drop will be more. Yes, you are right. That is what the forecast expects. And see, I'm not talking like a self-boasting or something like that. I gave the forecast. I am been giving the forecast for the yearly forecast from 1998. In 2001, I gave that that USD will be under severe pressure in the month of September, and I was surprised to see that it has happened, a disastrous twin tower blast, and I never expected that sort of event will happen. But from that time onwards, US dollar started losing like anything. But when euro was trading around 0.80, I was telling everybody, or 85 or 0.90, I was telling everybody US dollar is going to be under pressure, and it is better to do buy and sell trades in euro and GBP. GBP was trading around 1.27 at that time, and suddenly 2009-11 happened, and afterwards we are not able to see that euro below parity and GBP below that 1.35 things like that. Only last year or year we saw that. So that sort of impact can happen in the world, and many people will be. There was a question here also. If that is the case, then people will try to attack. But it is not that I am just giving any sort of threat or something like that. These are all the estimates derived out of the forecast algorithm. I do not know what is going to happen, and I can only say that the currencies or the commodities or the stocks can undergo this sort of pressures in these years. So there could be an event which can be a natural event, and it can be an artificial man-made event. We do not know about it, and so let us see how exactly it comes in, and as it comes, we will accept it. Still, that is why I say that don't trust on the forecast 100% and use your trading strategies to limit the risk, whether you are doing a buy and sell trade or a sell and buy trade in any given market condition. If there is expected rise in euro and GBP, yen crosses if there is expected rise in euro and GBP and yen crosses. How can there be USD CHF, USD CAD and USD yen at the same time if USD will be under pressure? That is what I explained, that they are expected to make the contrary move. Say for example, when euro is rising about 100 pips, CHF may not drop 120 pips. Instead, it might drop about 30 pips. When euro is dropping about 50 pips, then CHF might gain about 100 pips. That is how they will handle it. It will not be a simultaneous move. It will be an alternative move. Okay, Alex. You say the players who are there. How big are they? I thought it was this. Okay, I explained this, Alex. The players are billionaires and the richest in the world and things. I do not want to give more of it. Okay, DP. What range USD CAD and USD yen can be today? Okay, in the case of USD yen, the low is in, and they could make a rise above 89.18. And in the case of USD CAD, the low is in, and they could gain the levels to that of 1.06 area slowly. Okay, now SU25. For confirming trend reversal, we have to see 2 days of spike. And will you please let us know if you are blocked when the spikes have happened and to confirm trend reversal? Yes, definitely. Yeah, I will try to give in the blog beforehand when the spike is expected. And see, I'm willing to give all the analysis. But if there are ridicules coming in, then I become defensive because I'm also a human being. So you have to understand my limitations. And at the same time, I feel that by giving this sort of thing, probably it might misguide the traders. So I become defensive and not to give any updates. Otherwise, I'm willing to give that update. And if it does not happen, you can say that it has not happened. I will be very happy to accept that it has not happened because in my focused algorithm, I'm able to identify the spike time and I give the spike times. But when some people try to ridicule it and go on giving various other type of conversations and comments, I also become disturbed to a certain extent. I don't show my anger because I suppress my anger to a greatest extent possible because I know very well I'm a trader. I should not become emotional first of all. And I take my effort to see that others are also not triggered in anger. And I try to suppress it. I know many of the comments which are coming in the blog, which are all out of frustration against the market. So I don't take it personally to a greater extent. And I am willing to give all my analysis similar to any type of analysis. See, either a technical analysis or a fundamental analysis. You know that in the blogs and other comments you find in case if euro rises, you will find the first resistance at 1.3730. In case if euro drops, the first support could be 1.3558. Okay, that is how either way levels are given. Okay, so that doesn't mean that there is an uncertainty with regard to that. So that is how the analysis is. So similarly, my analysis is also of a different nature, trying to give this. And don't think that I am trying to fight against that market all the time and trying to give that. My analysis, whatever it says, I want to be true to that and try to give it. So use this as an additional analysis available in the market. And this is given free. I am not charging for that. So you can use it whenever you find it is suitable or you find there are limitations with regard to the forecast and try to just ignore it. I think that will be the best way of handling situations rather than spending a lot of hours and instead of focusing on the trade, giving a lot of comments in the blog and divert others. Okay. DP. What do you expect GBP yen and Euro yen crosses today? Yeah, as I explained that Euro and GBP are expected to gain and also USD yen is expected to gain. So we could come across a significant gain in the case of Euro yen and GBP yen cross. Okay. GRO. Give that you say that the USD weakening move caused by a unique world event which you thought was going to happen in November. Do you think that there is much more downside before we get to the trigger? See, now almost the month end is over yesterday, I mean Friday, and now a new month. New month, not many people will be having positions, and those who had taken the positions in the derivative market, they would have just lost the money or they would have closed it and they would not have swapped the positions to the new month. And so as a result, in the beginning of the month, that sort of massive moves will not be seen, but we'll come across false moves. So do you think there is a much more downside in Euro and GBP? I'm not expecting much of a downside because in the month beginning, there may not be any pending positions, much of the pending positions with regard to the major traders. So obviously, they will not be induced to liquidate their long positions. And the only thing is you come across the major events in this particular week. So before that, they will be making the false move and sometimes the stop. So they will allow the traders to take the positions on either way on Monday, Tuesday and Wednesday. Then Thursday and Friday, they will try to show their true color after the event. Okay, Jimbo. Do you see Euro and GBP cutting the low this week? There can be downward stopping because the major events at that time they can make another 50 pips or 100 pips downward stopping they can make. In the case of Euro, the low is about around 1.34, so it is in the safe zone. So even if they drop, probably they may drop up to 1.35 or 1.3440 just for a quick false move they can show and subsequently gain the levels. But in the case of GBP, you know that earlier they showed around 1.42 in 2008 and subsequently went up to 1.33 or 34. And similarly on the upside, it went up to 2.03 and many people thought that okay, that is the end of it. In the case of GBP, it may not rise further. They raised it up to 2.11. That sort of extreme moves they make. But they are all during the multi-years. I don't anticipate that sort of moves they could make it in the case of GBP now. Probably they may just visit 1.50 just to show the extreme of bearish condition or even 1.49 just intraday and then subsequently reverse. There is an order book, $25 billion sell order placed at staggered pricing to conversation. Could this be the cause of reason for further drop in GBP? So when an order is placed and it doesn't mean that the order is retained there, please understand. And if somebody is placing an order for 25 billion sell order at a place and they will not disclose it, if they disclose it, obviously nobody will buy it from them. So you have to understand the hidden agenda behind it. Okay, C25. If the rise happens in March, April, will you please recast the chart? Yeah, I will recast the chart. What is expected in the month of October, November, that will be placed in the month of January, February, March, and January, February, March levels will be given instead of the October, November. Jimbo. Last week you said that the reversal was expected by end of this week. Do you still expect it? Yes, I am expecting because you know the hat trick rule, they will not make similar moves for more than 2 days, 2 weeks, 2 months and 2 years. Any spike in Euro USD expected today? Not today, the spike is expected. Probably tomorrow during the European session, a spike is expected in Europe. I will give beforehand the spike times in blog. Okay, maybe you could post a comment on spike time, then those of us who attend the webinar will know that what to conclude from this. Yeah, sure. I will definitely give it either in the form of a new post or I will just give it as a remark or a reply to the comment so you can make use of it. And those who are following it up with regard to my focus, they can make use of it. Then wise, how do we get the application we are using? I'm not able to get. Okay, what do you expect for USD CHM? I said that it is expected to gain levels. Every trade I play in your side with many pips. Do you get for those trades? No, I don't want to talk about my site here, please. Okay, the questions are over. Let me display the slide over the top. I mean, the camera over the top. Focus for today. So during the Japanese session, swing and firm up moves are expected. And during the European session, firm up and slide moves are expected. Then US session, swing and rise moves are expected. So there could be some amount of volatile moves, but not to that level of Friday. They will not make some induced downward soften or induced upward soften. They will make very quick movement or swings, and you can make use of it for swing trade. But position trade, I will recommend do buy and sell trades in the case of Euro and GBP and not sell and buy trade as far as position trades are concerned. As far as swing trades are concerned, either way swing trades can be done, but you have to keep the necessary measures so that you are not adversely affected. So I take this opportunity to thank everybody who comes here to listen to my talk. I thank FX Street for uh, giving me an opportunity to present this webinar and also record it and display it so that it will become a recorded evidence for you to find out how exactly the forecast works. So probably if there are some deviations, then we will be able to accept or understand that there are limitations in any sort of forecast given in the market.